Hello and welcome. I am Sarah Snell Cooke, your host here at the Credit Union Connection. I was joined by Ricky Guillot recently of BAFS, Business Alliance Financial Services, BAFS. And we talked a lot about subjects that are near and dear to my heart, small business lending, and how to do it right, how to do it well, how to do it efficiently so that it actually is profitable for credit unions of any size to make loans of most any size. And with that, let's connect with Ricky.
Business Alliance Financial Services. We've been in existence for almost 17 years now. I started the company in September of '09 with a mission. That mission has not changed. We are still serving the credit union market in a big way. Our purpose was to really introduce and then grow the commercial lending or small business lending aspect for credit unions all over the United States. What we do.
Cool. Yeah, no, it's something that credit unions have definitely started more than dipping their toes into. But I would step back a little bit. Small businesses are turned down for funding every day. The number one among small businesses is just not capital available to help them grow. And even credit unions are buying banks to get expertise generally in commercial lending. And so, we're going to talk today about small lending. How is that defined? Why is it growing now?
This lending aspect, when you say that in the credit union environment, especially those mid-tier to tier in assets credit unions, it just seems a little bit overwhelming because they're so retail oriented and very good at that and serving the community. What we try to instill is that it doesn't have to be overwhelming. Number one. Number two, there's two things you really need in order to be successful at that. One is a robust technology, make it seamless for a small business. One. Number two, to have the back office to do that. Again, most credit unions, again, that mid-tier to lower tier and asset size, don't feel like they have the resources to do that. And that's where we can help them, A, that they can do it and do it very well, and they can do it at a pace that meets their needs, but also they can grow their credit union in a really big way. Because if you stop one business owner, ask them a question about their business, they will literally talk for the next hour. You don't really, seriously, business owners are
Yes.
just entrepreneurs are that way. And they love their business. They'll talk about it for hours, literally. We help our credit union clients really begin a program at their own pace and then go.
Yeah. And getting back to the lack of capital, why aren't these
Yeah.
smaller dollar loans getting made?
Yeah. If you look at the marketplace right now, even in some of the community bank spaces, the 50 to 150, $175,000 credits are very, they can be as time consuming as a $2 million deal. Just can. And again, therein lies one of the reasons for having seamless technology to facilitate that, right? The other thing is profitability. Again, they're looking at the larger deals that have not necessarily more margin, but it's a bigger dollar amount. And your small businesses, and I'm talking about your service providers in the community, the landscape folks, service oriented businesses of any type, what they're typically doing now is either going to an institution that offers commercial lending, or they're going to these online lenders that where terms and rates are not really that attractive, but it's something that a small business can get to very quickly.
Mhm.
Again, that's not always the best option for them. And then to me and to our company, what really makes a credit union so valuable to small businesses is that they already have the community orientation. They know their community very well. Chances are they've got hundreds of entrepreneurs and small businesses in their membership.
Yeah.
They just don't know that
Yep.
because they've never really paid attention to that. So the transition for them to a small business is so logical and so seamless for them that it just makes a lot of sense. It also helps them to diversify and
Mhm.
serve their communities even further. We just believe that it's a perfect fit for credit unions, especially in that small business lending space. And again, we're talking about 50 to even $200,000 deals.
Yeah.
It's larger institutions just don't want to do them.
They might just give you a credit card, move on. It's
Yeah,
fine. Yeah. And so I know among credit unions, there's a perception that it's very expensive to set up
right.
a commercial business lending or small business lending even, and that it's risky. And so how are credit unions successfully entering this market?
Yeah, I can speak to what we do to help them. And basically, the old adage was I got to hire, I don't know, three, four, five people. So you got additional human resource costs. The platforms don't necessarily integrate with what we do. So you got a cost there, you got time. You look up and you think you've got a mid six-figure investment, and then you got to make 4, 5, $6 million worth of commercial loans to even pay for it. That's not true. We facilitate it by number one, we call it a blueprint. And we do a feasibility study, we do a go-to-market strategy for them very inexpensively to at least tell their board and their senior team, look, this is viable and feasible for these reasons. You have to tell them why, right?
Mm.
So we do that first, take a very patient approach. Secondly, you have to have the technology in order to facilitate that type of loan. We have that as well. Thirdly, you have to have the human resources, the people that have the expertise to facilitate that type of credit. And what we do is we put that in position for those credit unions to do it at their own pace. So the
Mhm.
technology costs, we keep it a very minimum. The human resource costs, they don't pay for unless they actually use it.
Mhm.
So you don't have this fixed cost that's sitting there that you have to eat every day. You only pay for what you consume. So the business model that we've set up allows a credit union of any size. We've had some as small as 60 million begin a small business lending program, very successful. And what it does for them, and they're beginning to realize this, is that business owner will now tell their employees, they may only have 5 or 10, right? But they're going to tell their employees, and those families are going to now migrate to that credit.
Mm.
Moreover, they're going to bring other consumer-oriented products to the credit union that they didn't have to begin with. So
Mhm.
there's a lot of very, I call it silent cross-selling that goes on in a credit union that they don't even know about. What we're trying to help them do is facilitate what we call a silent migration. We don't want those members to migrate to other financial institutions to get a small business loan of $80,000 because their current credit union can't offer it.
Mhm.
So we're trying to help those credit unions really maintain and then grow. That's the goal.
Yeah, and so what should leadership teams, executives, as well as the boards, probably from different perspectives, I would assume, what should they be looking for and paying attention to when they look to enter or expand in their small business lending?
Yeah, one of the first things that we do through our feasibility study and go to market strategy is you want to mitigate your risk because if they've never done it before, it's a little bit, they're a little tentative coming out of the gate, and that's okay. We recommend that they do so. First step is to really institute a solid policy that everybody understands. Training is also very important to make sure that you don't have to have a tenured commercial lender. What you need is someone that can build relationships in the marketplace. They know their membership, they know their community. And we want to help those people and teach them the vernacular. What do you ask for? How do you ask for it? Those are very routine things that we help our clients do. What a board and a senior management wants to look for is, do you have members coming in asking about commercial products? Chances are you've got board members that have some type of small business, or is it on their strategic plan? Are they waiting for the right time? Let me tell you, the right time is anytime. I can tell you because we've done it in down markets, we've done it in up markets, we've done it in markets that are expanding, those that are contracting. It's about mitigating risk and serving your community. It's not
Mhm.
any different than a consumer product. And we try to make it as seamless as we can.
How is that risk mitigated? What are the steps for that?
Yeah, the first step is to really understand your market. And that's why a feasibility study and a go to market strategy is really important. Number one. Number two, probably the most critical piece is developing a very robust policy for small business lending and adhering to that policy. That's one of the things that we've done in our technology is that we are able to embed that specific credit union's policy and the technology that says if you propose this type of loan and it's outside of policy, it's going to flag it before you ever start. Then what you want to do is adjust that credit request to a point where it does fit policy. It may be too large, it may be certain structure, it may be rate related, it could be many different things. But policy is very critical. You want to make sure that the board understands the policy and their senior team and their mid-level team understands it as well. The policy and making sure that your rate of growth is reasonable. That's the next step, is making sure that once you implement it, that your rate of growth is reasonable. You don't want to throw up a lot of red flags for the NCUA, and you can. So you got to be very careful. You got to be patient. But that's where we come in and we help them do that. We help them really mitigate areas that they don't need to be in. We look at loan size, we look at loan complexity, and where they can best serve their community. So that's the key.
And tell me a little bit more about the go-to-market plan too. What's that look like?
When we look at a go-to-market strategy, we want to make sure that they're in a position to offer your basic commercial products, like a commercial checking account, a commercial saving account, and then concentrate on your loan documentation and compliance so that you mitigate any risk associated with just a normal everyday implementation of a program and an implementation of a loan. Mitigating risk is something that comes on all fronts, not just the credit tight, but the follow-up. I call it the honeymoon period, where everybody's giddy, right? You want to make loans and you got members that want to borrow money and everybody's really happy about that. The real challenge is after the loan is made. Commercial lending is a living, breathing thing. A commercial loan changes daily. A commercial business changes daily. It's not like making a loan for a car and when the payments are made, you know everything's good. Things change in a commercial business, and we help our clients really follow that and mitigate that risk as well. The go-to-market strategy also takes into consideration competitors. Who do you have in your marketplace? Can you provide something that they're not? It could be some things very simple. We've seen go-to-market strategies that encompass very basic things, and that's most of the time because your entrepreneurs are they're just looking for a relationship. And I think lending in general, we've lost a lot of that with some of these online lenders, et cetera. That's transactional, and transactions happen every day. But relationship lending is different. And I'll tell you, I've been in this business a long time. The relationship part, especially for credit unions, is the key.
Yeah.
It's all about relationship. Like I said earlier, business owners want to talk about their business.
Yeah, for sure.
They love to do.
And credit unions, that's just their reputation to begin with, is being more relationship focused. So yeah, it makes perfect sense. So if a credit union is interested in getting started, is there a first step? Like, where do they begin?
Yeah, I think really the first step, if you've never done it, you don't know anything about it, you want to test the feasibility. Is it something feasible for us to do? You want to look at your market, you want to look at demographics, you want to look at competition, you want to do some ROI calculations to see, okay, is this something that we really can do and do well? Another thing that I would strongly urge them to do is to poll their existing membership. How many small business members do you currently have? We spoke to one 2 weeks ago that started by opening commercial accounts. They have 600 commercial accounts. I'm talking about checking accounts. They have 0 business loans.
Right.
That I call that low hanging fruit. I'm from the South, so I use terms like that a lot. Yeah, test the feasibility, understand your market, look at your current membership, and then start slow. You don't have to come out of the gate and build a $10 million portfolio. That's not the objective. The objective is to create and maintain relationships in every facet of what you do.
Now, I know it varies by lender, but where is the point where it actually becomes profitable? What size kind of portfolio would you need?
I'll tell you, we write feasibility studies constantly. And when you look at the cost associated with implementing a program I'm talking about the BAFS, BAFS. Your ROI is in year one. And it doesn't take a significant amount of commercial or small business loans for you to recoup your investment. And what you don't see in that ROI analysis is the additional consumer and retail oriented products that they're going to gain. Again, it's that silent cross selling that I talked about earlier. That happens and it happens regularly. So I can tell you in most cases, we see a return on investment, a return of investment in year one. And again, that doesn't take that many loans. If your average loan size is $100,000, and look, in a small business today, if you buy a work truck and a trailer, just being hypothetical, right? It's over 100 grand just to do that. And there's a huge need for that. So facilitating those needs, getting a reasonable margin on those loans, and I will tell you in the marketplace, a gross margin of somewhere around 4 is probably normal if you look at today's rate environment. So when you do the math, if you do 8 to 10 loans in a year, then you're okay. So doesn't take that many, it really doesn't. And I'm talking about a credit union of minimal size. I say minimal, 65, 70 million in total assets is very doable.
For sure. And what about the business lending cap for credit unions? Is that a real problem or a concern at least?
No, it's really not. The cap is currently 1.75 times your capital base, generally speaking. I could get in a lot of detail on different ways to calculate the cap, but I won't do that. And then you have a lot of credit unions that are CDFI and low income designation, and it changes the dynamics of what their cap really needs to be. So cap is typically not a problem. Today's environment, too, what we're seeing is that community banks and other larger financial institutions have what I call a liquidity squeeze. In other words, you have to have the liquidity to do it. Most credit unions that are in that mid-level to smaller level don't really have a liquidity issue. So you see a liquidity issue more than you see a cap issue, but we don't see that in the marketplace right now. Not with the market that we're talking to.
Yeah, I absolutely think this is a great opportunity for credit unions, especially now. Seems vital. So I always allow my guests to have the final thoughts. What would you like to leave our credit union audience with today?
I guess my final thought would be this: don't be overwhelmed. Don't think it's overwhelming. We do this every day, and I'm not making light of it, but because it is a change for a lot of them. But I think we're in a market today, and I think going forward, that you have an opportunity to expand, maintain, and expand your member base by offering small business lending. You're in a perfect position strategically to do this. Don't let the anticipated cost, the anticipated complexity of small business lending get in the way, because it's not. It's something that we as a company have really strived to do, is to help those people that really need the assistance in getting it done. So don't be overwhelmed. Let us help.
Yeah, awesome. Thank you so much for your time today. I appreciate it, Richard.
Thank you very much for having me, Sarah. You have a wonderful day.